The following is a presentation of TFNN. It is now time for The Trader's Edge.
Hi folks, Basil Chapman sitting in for Steve Rhodes. My pleasure to be here. Usually I'm in at 11 o'clock till 12 Eastern time with my Tiger Technicians Hour, but I'm going to be sitting in for Steve. I believe that Steve is off to his daughter's graduation. Congratulations to both of you. Wonderful achievement. And I unfortunately cannot come up with those wonderful words of philosophical words of wisdom that Steve distributes every single morning with every one of his shows. It's just fabulous that he can do that. But I am going to paraphrase Mark Twain here, looking at the market. Right now, the market looks very much like an envelope without an address on it. It is so close to trying to make a stamp in the all-time high territory, and yet it's taken weeks to be able to get there. I'm watching this, and I suspect that there will be a pop to a new recovery high. Certainly the E-mini that I'm showing here, trading at up 50 cents at a big spike. I love those. I call it the, I wonder if I can show it here. Let me just see if I've got it. Yep. In the 2-minute chart, you'll see it beautifully. You see this big spike here? I call this the Eiffel Tower. It looks like an uppercase A. And what happens in a move like this, it's an emotional response to something. Usually it's some economic news or whatever it is. And the price goes straight up and it comes straight down. Looks very much like the Eiffel Tower. I call it the Eiffel Tower pattern. Did I just remove it? The Eiffel Tower pattern. And I'll just get it back again because it's really fun to see. Well, it would be better to trade, but I was busy preparing here. When it did spike up, that was just an opportunity to at least take a jab at the short side. It would have given you a full retracement back to the bottom. So this A pattern, let me expand a little bit so you can see it. That straight up, straight down becomes an A- in my work in the Chapman Wave methodology. Let me just quickly tell you a little bit about what I do. I have a service here called the Opening Call. It's a daily, very comprehensive look at the markets. I wonder if I can get some things up here just to show you a little bit. Let me see. Would it be here? Would it be there? Yes. Okay, so what I've got here, this is the E-mini. This was before the news this morning. And what I discussed is that this rectangle formation between 1882.75 and 1871.50, well, rectangles can last a lot longer than your patience. And in that particular context, what I'm looking at here is that even though there was a pop to the upside, there was a good chance that the market would have to come back and retest around about the 1879 9-period exponential moving average. And if it did that, what would happen is that it would establish some kind of a base. And also what I had said is, looking at the chart pattern this morning when it was trading at 1879, 1877 to 1875, 73s right there wrote it in, with 1881 to 1883s as the upside range. When it went out the range, it went to around number 1886, and whoops, it came all the way back. And most importantly, now let me get out of this. I want you to show you the next one. Let me see if I can actually put it up here. And I can see it. What I do is I show the Dow chart every single day. There it is. And in this Dow chart, that goes out very early, sometimes 6:30, sometimes 7. I get it out real early. And my final venture in the morning is to get out by about 8:35 my trader's corner, and that has all our positions, whatever it is, change of positions, trading stops, buy stops, whatever it is, entry points for new positions. So this rectangle here, I do usually it's straight after the market closes. Very often I start in the last hour of the trading day, and then I'll have to make a change with the it's so often that the price is very close to what I'm typing at about 3 o'clock. Funny, that last hour very often doesn't have all that much change. Now, what happens is I then add a whole bunch of, to put it into context, probably either that night or the next morning before I send it out, which is the second chart I I first of all send out the this Dow chart, then the second chart will be the overview. So this chart has a little update and it gives you parameters that I'm looking for. Then my overview with I call it overview and market today. What happens, you go to my site and you just refresh, and every time you refresh there should be new charts, and it goes right up until about 8:35. And in this one, what I'm showing here is that the 120-minute chart has made a series of arch formations. At a peak D, it was a peak F. Oh, let me explain what the peak D is. In the Chapman wave methodology, it's a very simple process. You identify the lowest, most obvious low bar, and then you merely count each successively higher peak, and you want to get to at least a peak D. That's where it can. It doesn't have to, but that's where you can get the sharpest and price and longest time pullback. And it happens so often. It must in the last week alone, I must have shown at least 3 dozen charts that have done that. Oh, it's probably way more than that. So in this particular context, the Dow 120-minute chart at 16,565 made a peak D, and it came right down and tested the 200-period moving average. Let me just double check here. So we're going to go to that. Close window. I want to be able to see what you see. That way, we're on the same page. So that'll go right back to the beginning. Right back to the beginning. Okay, here we go. So I'm looking at exactly what you're looking at, and yep, there it is. So it's a little dark with black background, but you'll see that those arch formation says that unless the Dow can spiral higher above that former peak D that was made right there, and this particular instance, it's at, I think, was 16,613 or something like that. If it can push above that, that's going to be very positive. But if it pushes sharply above it, that could say we're about to test the old high of 16,631 in the Dow. The S&P high was 1897s, and the previous high was 1884s, and we're already a little above that. So this is going to be a very important session. Is there enough strength to go to the all-time highs? I think within the next few days we should at least attempt it. Failing here, now comes this thing. The VIX, the volatility index, says that there's a cup formation, and there's a second cup formation. It allows a little bit of room into the 1290s maybe, but going to the 1270s, the VIX closed at 13.25. The volatility index, really important indicator tool in my work. And as far as I'm concerned, I just merely call it, for years now, I've called it buying pressure and selling pressure. I don't like the term overbought. Fear and greed. I just think that is so misleading. How can you trade something that says fear and greed? But you can trade something that says, I'm in buying pressure, I'm in selling pressure. That's the way I look at it. And there are numbers to go with it, and I explained it exactly here. I've said above 13.50s, market slides. Under 13s, and the market rallies. So I try to give numbers every day. So that's what I do and then I will go to, let me see if I can find one here. Maybe that one. No, maybe this one. Okay, here's one we have been in many times. We aren't in it now, unfortunately. It's Alcoa. Look at that fabulous action. Look, this is a full view of it. This is the 120-minute chart. In leg C, it should pull back, and it should make a peak C, and there's tremendous resistance in the 1360s. Right now, it's at 1365. So right in here, if it pops into the 1378, 1382 area, that is very good action. The monthly chart, that's this on the right here, that is soared parabolically almost, but it isn't parabolic. If you look at the left side slide, that's that Grand Canyon slide down the side, vertical, move down, and it went all the way down to 7.63. So all it's doing is really making a cup formation after making a huge arch formation. This is the weekly. It shows you very clearly the 9-period moving average support, shows you the up channel. Look at that beautiful up channel. And there's that little dashed red line, which is the inside track, Chapman wave inside track, sell or repellent zone. and this is the buy zone, the little inside track over there. Yeah, has been the buy zone, but all that's happened is that Alcoa is stuck in the middle of this beautiful up channel. Here's the daily, and the daily has gone to a cup formation. This is one of those, if there's a powerful move to the upside above 1370, that says you can go higher if you can close it 2 out of 3 times. That's on the daily basis. The other aspect to it is that there was the MACD. This is the MACD is flattening out. And though it's still holding well, it is saying the price is going to have to lift me up to more positive territory. But the stochastic is at 78%. Under 80% says to me there's a chance that Alcoa is within a couple of days of making some kind of a consolidating top. In other words, I should get some signal within a day or two that says I'm coming right back into the mid-13s, maybe into the low 13s to consolidate. So this is what I do every single day for my subscribers. If you don't have time, you'll be able to go straight to my Traders Corner. I'm showing it just, you can briefly see it right over there. I'm not going to put it up because I've got a couple of things going on for today, which wouldn't be fair to my subscribers. And right there. So it's a very detailed, how many bullet points? 16 bullet points. And I give the parameters for the Dow Diamonds, the SPY, the Qs, the GLD. Well, not always exact numbers, but I'll tell it if it's in a rising, if it's in a buy mode or a sell mode, or like the TLT. The TLT is very interesting here. And we'll have a look at these in a moment. We've got a break coming up, I believe. Is that a break? I'm not used to the... Yep, I can hear it. Coming up, a break. Basil Chapman sitting in for Steve Rhodes. My pleasure, and we'll be back to live action within 10 minutes, but I'm coming right back. Give a call to 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Sitting in for Steve Rhodes. My pleasure to be. I'll be back straight after this. You've got Tom O'Brien, and I believe with Daryl, and I'm going to be back after that for my usual show at 11 o'clock. I just got sent. I love this. People keep me informed all the time. This is the Kingdom Tower going up in Saudi Arabia, and it's going to be, it looks like, if I remember reading this correctly a while back, it's going to be the world's tallest building, but I'm not 100% sure. I'm going to look into it. Underway in Jeddah. It's called the Kingdom Tower. And they began work on it in January. It looks like a spiral to the upside. Beautiful. I have to tell you something. The architecture that's going on around the world, not so much in America. America, the great innovator, is way behind. The skyscrapers that are going up in China and many other parts of the world, in architectural terms, in the beauty of the structure, of the design, are absolutely phenomenal. They are just beautiful, beautiful buildings. Now, you can discuss the merits of skyscrapers, whatever. What's absolutely fascinating, and I discussed this for decades. I've been talking about it. That governments, municipalities, cities start to change bylaws to suit themselves, especially when they are looking for more. What's the term they like to use? They don't call it taxes. They call it income distribution. No, they call it income. And in fact, it's just taxes. They get greedy. And what we're seeing now for the first time in 60 or 70 years in the Boston, 60 years maybe, in the Boston area, they're starting to use the turnpike, the mass turnpike. I think it's the most horrendous idea to put buildings over the turnpike. And there's only one reason why I say so. If you've ever driven west or even east early in the morning or west in the afternoon, the sun in the eyes is so strong that when you go underneath the Prudential Center or the Star Market right here in Newton where I live, which are over the turnpike, that's the only time they ever allowed it. But now, of course, they're starting to allow it. Huge projects are being allowed towards the downtown area. The light, the sudden glare, and then the blackness of a tunnel, I think is very dangerous. Now, if they can get the fantastic lighting, which is available now, but they don't seem to be putting the money into the lighting of the tunnels. The lighting of the tunnels is imperative. You need to match almost the sun strength, glare. So tariffs is another word. Thank you. So in fact, let me put it this way. The design of the buildings that I'm seeing are quite nice so far, but they always get changed. The change in height, the change in all sorts of statistics that were and parameters that were not allowed before. That all gets changed as we move along. All of a sudden, Boston's going to talk about vertical rather than horizontal. So we're going to see Boston, which has always been a great college town, change over the next couple of years as we overbuild, and we will see buildings come up where there were never buildings. That's number one, which means that you've changed the face of Boston forever. And other things that will happen are the good and the bad, and you just got to have to put up with it. There's been a fantastic renaissance that Mayor Menino orchestrated going into the end of his term, which seems to be followed through now with the new mayor and Marty Walsh. But what I'm looking at here is the changes that occur are changes that are city changing. I say forever, we don't know about forever, but at least for 100 or 200 years to come. So it's got to be done right. It's got to be thought out very carefully. All right. Now let's get back to our story here. In the market, I just happened to grab the cotton contract, continuous cotton contract, looking very good, trying to go towards its high. Peak E in the Chapman wave weekly chart, leg D, and then peak D in the monthly contract. All-time high was way back, much, much higher, back in cotton, back in March of 2011. I'm going to give you the number, but it's a continuous contract, so that'll always change. And that's at 172. So let's do a couple of things. We're about to go to a break, and then we'll come back, and it'll be the fresh start of the day. Then I'll give all the numbers on what we're looking at in terms of, gold right now is up $1, silver's up 11 cents, and bonds are down 14.30. We'll look at all of that when we get back. We'll go into great detail into the different markets. So we've got a break coming up. 877-927-6648 is the number to call. I'm going to go through a chunk of things, starting off with the Dow as soon as we get back. Let me move the chart. There it is. I didn't hear the music. Today I'm starting to beat the music. Usually I talk right into the break. Yep, that's it. I'll be back after the bell rings.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yep, the bell is rung and the Dow is up a full 0.42, less than a point, at 16,560. The S&P is up 40 cents at 1884. The comp index is up 7 at 41.35. Gold is up 80 cents at 12.84. Really struggling to move here. Silver is up 0.08 at 19.13. Platinum is down 50 cents at 14.23. Copper is at 304, up 160. That's good. Crude oil is at 99.47, up 0.05. You've got bonds down 19 now at 135.03. And I'm going to show you right here the yield chart in a moment. We've got the dollar up 32 cents at 79.89. Euro is down at 10. And this is what I'm looking at. This is the 30-year. The white is the 30-year T-bond. Let me just move this away so I can see what you're seeing. The 30-year T-bond. And it has gone to a leg C to the downside after hitting 3.974 back in December, January. Now, what's important about this is that you see that the 30-year yield, T-bond yield, TYX is the symbol, is going a little lower than that horizontal trend line that was before resistance, and now it's support, and it was support right there. What date was that? That was on the round about the 28th of June of last year. Now what's happened is it's gone below, but look at the 10-year note. The note is just stuck in this area. If the note was to decisively break under 26.67, it's trading right now at 26.64. Wait a minute, let me get that right. If it was to break under the low, it's 25.79, 25.79, that would say be careful because it's going to test. Be careful, meaning watch the yields because bonds will be going higher. That's just what I meant. And that would say that the low bar of right there, round about 24.73, 24.71 will become a target, and that'll be a leg. It'll be a leg B to the downside. Leg C in the weekly. These are weekly charts of the 30-year. But look at the 5-year. The 5-year is stuck near the highs in this cup that made a handle or double cup formation, and it's at 17.28. So there is a divergence between yields concurrently coming down together. And in fact, I'm going to be watching that because once you start talking about an inverted yield curve, that's when markets tend to become the most volatile and vulnerable to declines. So I'm going to look into this a little bit more over the weekend and into next week as to exactly what levels I'd be looking at, why, and how it should impact the market. But in the meantime, lower rates means that money is going into bonds, but you see it's also going to stocks, but in a rotational way. So we've got our first caller. We've got Lou in Fairfield, Connecticut. Yes, hey. Lou. Hi, how are you?
Basil, you're magnanimous.
Magnanimous?
Normally, Tom O'Brien would be filling in, but he's a yoga fan now, so he's getting a little weak.
Don't say that. Come on.
He used to fill in all the time. Now he doesn't do squat. So anyway, I want to tell you you're magnanimous, and everybody's out here, they love listening to you. I'm out here every day myself. You're terrific.
Well, let me just say something here. I listened to Tom's show the other day, and I don't often get a chance on a Wednesday evening, that 6 o'clock to 7 o'clock that he does, and that's on mind wellness, basically. And it was really interesting, and it was some terrific things that were brought to the fore. I thoroughly enjoyed it. I've heard it periodically. I don't always get a chance to listen to it, and I must say that it is enlightening. It touches areas. They were touching the feet, actually. It touches areas that I know that I have to go now. Not have to. I am doing it voluntarily because of a program that I'm in right now. And once a week we do yoga, and I tell you, I'm enjoying it. But I get the point. So, Lou, you wanted to look at?
You don't really talk much about the European and the Asian markets. So I got to kind of like bring it up to you that I'd love to know where they are, because they're all attacking the highs.
They are.
In the European markets. You know, the FTSE.
I do follow them, but I have a problem in that some years ago, out of the blue, I lost my European data. And I keep calling them up, TradeStation, and saying, hey, well, what's happening here? And then they give me, I think I do have some of it now. I think I've got the DAX somewhere or other. I
know what's the matter with your system.
What?
I know what's the matter with your system.
What's the matter?
They use a Java database, correct?
I don't know.
Well, anyway, the whole thing of it is that you're going to have two different contracts with them, one for stocks and one for indexes.
Yeah,
because
I do. I have a whole bunch.
You're overloading their system.
I have for futures. I have the works. But
but you got to come in two different accounts because you're overloading what they can handle for information.
Maybe.
And then it keeps pushing out your old stuff.
So let me just do this, because I've got the iShares of the UK ETF. Now, the iShares is a different chart pattern, but it does give you a sense of what the foreign countries are doing. And I follow this whenever I can. I spend a lot of time on these particular charts. And in the weekly chart, it's recycled. There's no other way I can count it. I've got it as, well, wait a minute. Let me just make 1905, 1904. Ha! Just as well I did that. A, B, C, D, and then it goes to an E, and then it starts an F and a G. Yep. Here again, no matter how I count it, I believe that the EWU, which is the iShares of the United Kingdom ETF, has broken to a leg B in the weekly chart. Now, if that's the case, it says you could get a pullback, but the pullback, which is at 21.56 right now, EWU, it's down 2 cents, should not pierce 19.45, which is the low of the week of the 7th of February. So that's number one. Number two is the monthly chart I've got here, and this is recycled. I've got it in leg F in the monthly, but if I go to the EWQ, which is, I believe that is the, that should be the French. Yep, that's France. Oh man, I don't know how many times I'm going to have to do these things over and over. I've got a problem with my computer that it shuts down periodically, And when it does that, if it does it suddenly, which it's been doing lately again, it just knocks off my data, and I tend to lose the data. So let me just do this real quickly, and I'm going to explain something to you. The Swiss, I want you, in fact, I'm so pleased you brought this up, because the iShares of France, the monthly chart either is recycled up because the stochastics at 94%, MACD is good, but the price has got either an F or a B in the monthly chart. So far, everything is good, and there's a chance that maybe today we get a doji candle in the weekly chart, but it's really the EWY. Am I going to remember what it is? It's the Swiss. Anybody in the den that can remind me? I'm going to have to go through a bunch of EWQ. No, EWS is not Swiss. It's Singapore. Oh, man, am I going to not get EW? I wrote it down in my book. I wonder if I can find it. I wanted to look at ACE, which is a stock, and I've got it written down here. I'll find it somewhere. And I wanted to look at Switzerland. So I've got it written down in one of my scrolls on my notepad, and I'm going to find it in a second. All right, well, I'm not going to be able to find it as quickly as I thought, but it is the Swiss EW iShare ETF, and it was at highs. And my thinking was that it makes sense, because if you look at Switzerland, the chart of Switzerland over all the years, you will find that it goes to highs. It's a remarkable country. It's a very wealthy country, and it is always going. Look, ACE is a company in Switzerland. It's trading at 102.33. It's up 32 cents. The monthly chart made a peak F way back in 2014. I think it was October, November, at 104.07. It pulls back to about 94, and now it's trading back at 102, trying to tackle that previous high. Leg C in the new move up in the weekly chart, and a possible leg, a peak F, that recycled in the daily because it's holding the 9 EMA. So when you talk about the foreign markets, you're absolutely correct. Now, I had a call yesterday on the FXI. So, Lou, this is the fascinating thing about the FXI. This is China. It's the China. It's really a little bit more focused. It's the large cap ETF. So it's worth looking at it. And my chart of the FXI trading at 34.87, down 12 cents, says all that's happening in China is that there's stability, but there's no real growth. That's what the market is saying. It just keeps making this H pattern that goes to an M pattern. So it depends where in the foreign markets you're looking at, because if you're looking at EWT, which is Taiwan, in fact, is almost at all-time highs. Just had a consolidation recently in the ETF. Sorry, not all-time highs, recovery highs. All-time high was back in 2011, way back in February, and then double-topped in May. So this is climbing. So I agree with you. And I think your point is that there's an international recovery?
Well, something's going on. We can't break down unless they all break down. You've got to fire on all the cylinders or none of the cylinders.
I have to agree with that. Oh, man, if I lost... I can't believe what's going on with this, what's going on with myself. I spent so much time on this chart the other day. The EWL is the Switzerland iShares, and it is at all-time, almost at all-time highs. And that's really what I wanted to point out, that yesterday it made an all-time high. So the way I'm looking at it, and one of the reasons in my opening call, we have only long positions in the trades that we've picked up over the last couple of weeks. We do have one particular short, but it's a long-term short because I believe that that sector has made a major, what I call a hat-trick top, and will be going down over the coming months. But we have got that as a short-term trade on the long side in a full position that has done quite nicely percentage-wise. So the way I'm looking at this market is this is a big test coming here. And for me, it's a very simple issue. If the NYA.X, that's the New York Stock Exchange, all it has to do is at 10,654. If it goes 15 points higher, above 10,000, is that 54? Yeah, 16 points higher. Above 10,669, I have to call that leg C in the weekly charts. And in the Chapman wave methodology, let me show this one more time, the idea is to get you to at least a D. If you get to a C and all the technicals are still looking very good, which they are right now, you should make that requisite D. If that's the case, all we need to see is the Dow, the S&P, and the NYA in the next week make a new high in May, and that says that the month of May is going to see higher highs, even if there's a pullback one of the weeks, because I need to get to C, a leg D. And at that particular point, I'll say, whoa, now we are ready for more of a consolidation. But when you think about it, Lou, 44% decline in something like a LinkedIn, trying to rebound here. If you look at an Amazon, a Google, these are massive. These are the greatest pullbacks that they've had in a very long time, some of them in years. I'm looking at this and saying, if the rotation continues as sector by sector gets their own comeuppance after being fantastic, but the market, because of the rotation, continues to find an Alcoa, or let me just have a look here, maybe, and a General Motors moving higher. If you've got that cyclical, if the late cyclicals like the aluminums and the autos are able to stabilize here, that means you could have a high-level consolidation, and you don't get this 20% market pullback that you would anticipate after 6 years of a mega bull market. Am I making point here?
I see. It's just a rolling correction.
At this particular point, there is really no choice but to call it a rolling correction, and I like to call it a rotational one because the rolling doesn't. Rotation explains exactly what's going on. It's saying that while something's going down, if you're on a seesaw and you've got two little kids on one side and you've got the grown-up on the other side, you're going to be balancing the seesaw, and that's basically what's happening at this moment. So I hope that clarifies things, at least in my particular viewpoint.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
So, folks, stay tuned because straight off this, you got the Bull Bear Binary Hour with Tom, and you've got the Diagnostic Trading Hour with Daryl. When the two of them discuss it, this is a learning experience. So take the opportunity and stay tuned. And so, Lou, you're still there?
Yes, I am.
Okay, so Lou, I just want you to do this just to show you a couple of things that I think are absolutely fascinating. I'm going to just, while we've got time here, I'm going to show you the Dow itself has, and I'm going to include the 120-minute chart. The Dow is in leg C. This is a really good chance that somehow or other it will make that leg D, and that's going to be the big test next week. Does it make a new high, or do we fail at a double top here? So that's going to be very important. Yesterday it was within 20 or something points of making an all-time high. I suspect it's going to do that. So that's, and then the weekly chart all of a sudden goes to leg C, and that'll be very positive. The S&P, SPX.X, the S&P, all right, this is not updated on the 120-minute chart, but the S&P, it's the same thing. If the S&P is in leg B right now, that should go to a leg D, and if it does that, it needs to get over 1889.84. The moment it does that, if it does that, that's going to be very positive because that turns into leg C in the weekly chart and extends the monthly. If you're looking at the QQQ series, they are lagging. And that's why I've got to have a heads up to say, whoa, be careful in this rotation. Things can happen here that are going to be very telling, because if the Qs and the IWM, and that's the Russell 2000, which is acting very poorly, if they start to stall, you cannot get the generals moving up without the troops. It just doesn't work that way. That's why I'm thinking that there's a limit to the upside, even though we can get a C in the weekly chart, pull back, and they make a D. My suspicion is it's limiting the upside at this particular point, that we won't get the very big breakout until we actually get a deeper correction. That's my thinking. So it's saying that May, I thought that there was a song that Frank Sinatra used to sing that said, riding high in April, shot down in May. May might be a little longer in the on the upside. I don't think it's that much in points at this particular point, and then we get a correction. So now let me just do the same thing with the TLT. The bonds squeak to a leg G in the TLT. Now that could be a G slash, let me just get rid of that arrow. That could be a G slash B. In my work, that says if the technicals are strong, the stochastics are 73%, MACD's just okay, good, but more okay than good. I'm going to be watching this closely because the USM has in fact gone to an E slash B with good technicals. I'm going to be watching that because I just showed you that the chart of the yields is suggesting that the 30-year might have some more to go to the downside. So I'm watching it very closely. If you put this together with the EUR USD, which has stalled, it's just stuck in this triangle, sideways triangle, symmetric triangle in the weekly chart. It's a little bit above in the monthly chart, above a very important resistance area, but it is holding. And if you put it together with the dollar, which disappeared right now, let me see where did, okay, the dollar, the DXY, let me do it again, DXY, that's making a big arch formation, but it's using up time rather than price in the monthly chart, which is good. The weekly chart is doing the same thing, making 79 is a nice base. And the daily chart has made an H pattern that if, perchance, it breaks above, this is the contract itself, above 80 next week, that could say that gold could be pulling back further. So I've kind of gone through a whole bunch of things. Thanks so much for calling, Lou. Always appreciated. Have a great weekend.
This stuff's a lot about Putin, and with the market in Europe.
Okay, yep, it is about Putin, but it's about many things. I'll be back in an hour for my show. Stay tuned for Tom and Daryl.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.